Hi guys, welcome back to my channel, Pinoy Abroad. So, sorry it takes me a while to upload new videos every time. I've been really busy all the time, especially with the new home. We moved in a month ago, and everything's just been slow, and we're trying to completely settle in. But there's a lot of things that we still have to do. But anyway, I wanted to sit with you guys today and share you some of my knowledge about purchasing a home. I want to share with you guys the requirements here in the US if you're planning to buy your new home here in the States, especially for you guys who are new here and you're probably interested in buying a home. Also, if you're moving into Minnesota, for those people who are moving to Minnesota, and if you're also thinking of buying a new home, at the end of this video, I will be referring to you guys a very good realtor, a very good, they're a team, guys. And they're really good, and there's a lot of things to be said about them, and I'll talk to you guys about that more in detail later at the end of this video. But anyway, I hope you like this video. You can start to subscribe if you're new to my channel, and if you think this video will be really helpful to you guys, please share this with your loved ones or to whoever you think this video will be really of a help. So let's get started without delaying. The requirements for buying a new home. There's two situations, guys. If you're not aware of this, you could either be a first-time home buyer or a second-time home buyer. Each person has a different situation. So if you're a first-time home buyer, you'll have a totally different situation. If you're a second-time home buyer, you'll have a slightly different situation. Later on, I will explain to you why these things are important. But before I talk to you guys about requirements, I wanted to explain to you guys how it works in the mortgage industry, how to purchase a new home. So you have your lenders, you have banks. These are banks or institutions that determine your qualifications. So if you're trying to get a home, it's not as easy as just flipping burgers. You will have to obviously contact someone, a mortgage company or like a lender company. I'll give you some examples like Rocket Mortgage or Cross Country Mortgage. Those are like big ones, and there's a lot of them across the country, depending on where the state you live in. So these people will determine your qualifications, and they'll factor in a lot of things like your bank statements and your job and your all sorts of stuff to determine your qualification. There's also what they call guarantor, I'm not sure if you've heard about USDA, FHA, VA, or conventional loans. So those are guarantors. So you have your lender will loan you the money once they determine that you're qualified. And then the guarantors are the ones that are going to insure the loan. So let's say something were to happen with the loan. So let's say you borrowed $350,000 for a home, and then for some reason after 2 years or 3 years you failed to pay your mortgage because let's say you lost your job and you couldn't recover anymore. So the guarantors will insure the lenders that they're not going to go out of business because they're going to insure the loan money. So that's what the guarantor is for. The two most popular guarantors are FHA, which is Federal Housing Administration, and then conventional loans or Fannie Mae. Your number one requirement for a loan application is your credit score. So with the credit scores, it's either you're borrowing by yourself or you're borrowing with a co-borrower. Sometimes they call it co-signer. So it's either your spouse or someone with you, a partner or a family member that will finance the loan. So you'll be together with that person living in the home. With a credit score, FHA, I talked to you guys about FHA earlier. They're the guarantors, and conventional, those two are the guarantors. For FHA, I'll just talk to you guys about FHA and conventional because they're the two most common. So for FHA, they require about 580 of credit score, and that's very low. And so a lot of people qualify for FHA. But lenders look at your scores too and determine your APR. So you want your score to be higher than that, obviously way higher than that, at least 700 or above, so that you can qualify for a much smaller rate of APR or interest. For conventional loan, it's 620, but a lot of lenders prefer 680 and above so that you can qualify more. A lot of people like conventional in the sense of, here's when your situation comes in. So if you're a first-time home buyer, you'll probably benefit more from the conventional loan, because with conventional loan, they're less strict. They don't require a big of a money down as opposed to FHA if you're a first-time home buyer. Now, if you're a second-time home buyer, you'll probably want to do FHA because they have a smaller down payment than conventional. Conventional is typically 5% for second-time home buyers, and then 3.5% for FHA. So regardless if you're first-time home buyer or a second-time home buyer, it's going to be a flat rate of 3.5% down payment for FHA. Credit score determines your APR, your interest rates, determines if you qualify. So if your score is below those scores that I mentioned, you will not qualify for a loan. They'll also look into your credit history. They'll look at your medical bills. If you have like a pending medical bill that you haven't paid or that went into collection, they'll be able to see that on your credit report. They'll also look into your credit history, like your car payments, your car loans. Have you been behind? Have you been not? Have you been just paying them on time? Your credit cards, are you maxing out your credit cards? Are you paying them on time? Smaller balances and credit cards are preferred as opposed to bigger balances, because that means you're hitting the max amount of your credit. And you're not supposed to do that. It hits your credit score as well. Outstanding judgments, like if let's say you defaulted on a loan, let's say you bought a car in the past like 5 years ago or 6 years ago, and then let's say you didn't get to pay the car because you lost your job or something like that, and so your car got repossessed. So what happens is that they'll take your car, and then they'll ask you to pay the difference of that loan, and then if you don't get to pay that, they'll take you to court, and then the court will decide if they need to pass judgment on you. So what's going to happen is they're going to garnish your wage. So if you're working, they're going to send a mandatory garnish. So what they're going to do is they're going to have your employer take a portion of that money from your paycheck, so that you pay that. They use that money to pay towards that loan that you didn't get to pay, or the balance of that loan that you didn't get to pay. So they look into that as well. So typically, if you have judgments, you're not going to qualify. A lot of lenders shy away from those people because they determine that these people will not have the capability to maintain paying bigger loans like a home. And things like that. The second requirement is obviously a job. So you need to have a job, preferably full-time. It could also be part-time. If you're part-time though, they require you to have at least 2 years of part-time job. So if you've been only in your job, if your job is part-time, if you've been only in your job for 1.5 years, that's not going to work. You have to have a full-time job. If you have a full-time job, they won't require you to be there in a certain period of time, as long as you're not temporary, as long as you're permanent in that job, in that full-time job. So they will also look at your income and your debt ratio. So your income versus debt. A lot of lenders want it below 40, want it like 30 something below with conventional in order for you to qualify for conventional. I think it's off the top of my head, but I think for FHA they're a little bit lenient as far as that. I think they can go up to 40. But that being said, the lesser debt you have, the better for you, because that means you're going to qualify more for a bigger loan. So Let me give you a scenario. My wife and I make a certain amount, okay? We thought we were more than qualified, okay? We thought we could be qualified for like 500,000 of a loan because of the amount of money in total that we're making. But it turns out we're only qualified for like a smaller loan, which is like around 400 something. That's already big. Okay, that's already big. It's a big house already if you consider. But then we've seen people, couples who don't make as much as we do qualify for even more than what we qualify for. So sometimes it's not how much you make. Sometimes it's how much you save and how much money you have at the end of the day. So they will also ask for your W-2s, your 1099s. These are provided by your employer at the end of the year before you file your taxes. So W-2s are your records of how much you made in the entire year. They're also gonna look for your pay slips, your pay stubs for at least 2 months ago for conventional, and then two recent ones for FHA. So they'll look into those so that they can factor in the income that you have and determine how much loan they can lend you. Number 3 requirement is your income tax return. So they'll also look into your income tax return. They're going to match it with your income and stuff like that. It's easy to get that. You can actually download that from irs.gov. They have like a link there or a place there where you can download your returns and stuff, or you can request that from your CPA, whoever you had your tax filed for you. Number 4 requirement is your bank transactions. So obviously they're going to want to look into your savings and your checking. They want to make sure you have enough money there to fund your closing cost and your down payment. So if you don't have enough money, of course, they're going to want you to come up with that money. So here's the trick. So sometimes they don't want you to borrow money because they don't want you to have another loan. Of course, if you don't have enough money and you can't come up with that money, then obviously you're not going to close on your home or you're going to be denied. Also, they're going to look into your bank statements because they're going to want to make sure that everything that goes into your bank, to your account, is legit. Number 5 requirement is home inspection. So let's say you offered to a seller, so the seller maybe said, okay, I'm gonna sign this contract, I'm gonna sell this home to you. So once the seller decides to sell the home to you, you're gonna sign that contract as well. They're gonna want you to have a home inspection. So the home inspection usually happens within that 7 days after you sign the contract. It's gonna be quick. They'll just give you approximately 7 days to complete the home inspection. The reason why they want you to do a home inspection, because of course this is for your own benefit, for the buyer's benefit. This is for your own interest because you don't want any issues in the house when you move in. You want to make sure everything's fixed if there are issues. Some homes, typically older homes, will have major issues. You're going to want to hire a very good inspector to inspect your home so that they can find problems right away before you move in and have them fixed. Also, the inspection is not free. You'll have to pay for me, I had to pay $645 for that. Yeah, that's about it for the inspection. Number 6 requirement is appraisal. So appraisal, so if once you've had your inspector come in and done the inspection, you're going to want to do an appraisal because you're going to want to make sure that the home that you're buying is appraised to the price that you want to offer. Some inspector will find that well, your home doesn't look like it costs that much, so we're going to appraise it for only like $350. So in that case, you're going to have to renegotiate with the seller. In that case, it's going to be another contract that you're going to have to sign once the seller agrees. Here in Minnesota, home values here go up typically. Normally they don't go down. So if you're if you're appraising for a home which is 364,000, typically it appraises to that price or even more. So that's the trend here, and that's only because a lot of homes here are like just really in demand. Like a lot of buyers are, you know, in dire need of homes, and it's just a crazy market nowadays, and that's why home values don't go down in this area. So the appraisal is not also free. You're gonna have to pay for that. For my situation, I had to pay $550 for the home appraisal. So the seventh requirement is your closing costs and your down payment. So I mentioned that earlier. So you're gonna want to make sure that you have that amount before you close, because you need that. So how much is that amount? It's typically, if you're FHA, then it's typically 3.5% of your home price. So let's say the home is $375,000. We got this home for $375,000, right? So we had to put a down payment of $14,000 because we did FHA. Closing cost is typically around 10 grand, around that. I don't know how much percent wise it is, but it's typically 10 grand, but sometimes they have this discounts and stuff, so sometimes you only have to pay 5,000 in total, but typically you're gonna want to save up 10 grand. So if you have already 15,000 or 16,000, let's say you're purchasing a 400,000 home, you have 16,000 down payment, you're gonna want to add up another 10,000 there to the 16,000, and that will be your closing cost and your down payment. Now, if it's conventional, it's different. So I'm just talking about FHA here. If it's conventional, it's different. So if you're a first-time home buyer for a conventional loan, so it's typically just 3% of the home price. So it's lower, and then the closing cost is about 10 grand as well. Now, if you're a second-time home buyer, then you're gonna have to put a down payment of like 5%. That's just it for that. And the number 8th requirement is your legal status documents. So of course you can't buy a home here in the States if you don't have a proper legal documentation. So you'll have to be either an immigrant or a citizen. At least you have a legal documentation that you can legally work here in the States and legally stay in the United States. So, all right, number 9, as my last requirement on my list, is your rental history. So if you didn't know yet, even your rental history, they're going to go through your rental history. You're going to want to make sure that you're paying on time on your rents, because that reflects on what kind of person you are, if you're also going to be paying on time on the mortgage. All right, guys, so I think that's it for my 9 requirements, but like I promised, guys, I would refer you people that I know. His name is Elie Safi, and I had such great experience with this guy. He works with a group of people in his team, and they're very helpful. Even though I've been to a lot of problems in the past before purchasing this home, he helped me through it. He was very smart and very knowledgeable of his job. He was even to a point of funding my extra month of rent because we thought we couldn't close on this home. So he was willing to fund me $1,300 to just, to be able to have a roof while waiting on this home. Very good guy. He advised me on what to do. I was in a lot of issues because time was limited. I had a home in Chicago I couldn't sell almost, and if I didn't sell that home, I wouldn't be able to buy a home here in Minnesota because the income to debt ratio is too high. So he gives you the best advice he can possibly give you, and he's not just after the money. He's not like, oh, I'm gonna make money out of $400,000, so just buy this $400,000 home. It's not like that. He knows what's best for his customers, and he really takes care of his customers. I promised I would make a video for him, so please stay at the end of this until the end of this video and watch this video. And I'll see you next time, guys. Peace out. 1, 2, 3.
I'm Elie Safi with Remax Results, and my partner
Deb Safi, Remax.
And we want to congratulate Ray and Honey Lynn on their new house purchase. Thank you so much, guys, for allowing us to be part of that purchase process. You are wonderful to work with. If we can help any of your associates or friends, go to thesafigroup.com.
Oh, wish you the best of luck
Yeah.
in your new home. It's going to be so exciting to have it be yours. Congratulations.
Thank you, guys.
I'll link down the contact information about them guys down in the link description below. All right. Thank you.